Hi everyone and welcome to my weekly update with me, Richard Perry, market analyst at Hantec Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've had progress finally in Senate on tax reform, and this is the key factor moving into this week. It's improved risk appetite, and we've seen the dollar pulling strongly higher, equity markets bouncing strongly, and this is the big thing that the markets have been looking for, certainly in the last few weeks anyway. Seems to be that tax reform has been a very volatile factor on the markets, and now we're seeing a bit of traction. We're starting to see that the markets could now begin to go through a bit of a trending phase, possibly. Now that, as you can see on the chart here, the dollar is now testing a downtrend. If it breaks out through that downtrend, that would signify a key move on the breakout on euro dollar, key move on the breakout on dollar yen as well. So these factors are important. Now what we've also got is treasury yields, which are strongly higher. Certainly the 10-year reacted back above 2.4%, still around about 2.4%, but if that can gain traction above 2.4% on the 10-year yield, then we might start to see a bit of steepening of the yield curve, and that would certainly help to support the dollar on a consistent basis. But also what we've got factoring into these markets is Brexit negotiations seem to be finally finding a bit of traction themselves. The EU has 3 red lines on the divorce bill, on the EU citizens' rights, and also on the Northern Irish border. It seems as though that the UK's Prime Minister Theresa May is being able to finally come to the table with some sort of a workable solution for all these arguments, and certainly that means if the EU can accept what she brings before them, then we can move on to trade negotiations, which is ultimately what the market really needs. We're subsequently seeing sterling strengthening quite a bit on Monday morning. That will continue if we start to get a sort of a run of good news through that through these negotiations. So this is a sterling positive move in these markets. But throughout this week we've got a bit more of the Tier 1 data coming back in. We've got the services PMIs mainly in the early part of the week, but then we focus on non-farm payrolls, which is the final payrolls report before we see the likelihood of that next Fed rate hike. So a bit of data back end of this week to focus on. But in terms of FX markets, what we have got on euro dollar is a test of support, 18.15, there or thereabouts, 18, basically above 18 big figure really. And if you see a breakdown below 18 big figure, that would suggest that the dollar is beginning to gain some serious traction. That breaks the uptrend channel of the recent few weeks on euro dollar and starts to sort of suggest that the dollar bulls are gaining control on a consistent basis. Similar sort of situation on dollar yen. Dollar yen has rallied back to a pivot around 113 big figure. If it can sort of hold a move above 113 big figure again, that reopens the highs of this medium-term sort of 8-month range that you've seen dollar yen trading in, and that would be around about the 1425 to 1450 top of that 8-month range if that were to be seen. So some traction there. But sterling is a big mover. It's been stronger relatively against the dollar recently, despite the fact the dollar has been sort of looking to gain a bit of traction on strength. And again today, what we've seen is suggestions that Theresa May was going to come forward with some decent proposals. That helped to strengthen sterling, and that's what we've seen during the session today. So if this continues, then sterling will be on the rise, and it looks like it's sort of building for a test back above sort of 135 figure area again, if that can be seen. Other than that, we've also got to look out for the RBA and the Bank of Canada this week, both giving monetary policy updates. Not really expecting too much movement out of either, but the RBA could be an interesting one given the wage growth, which is the struggle, and if that can start to see growth coming through, then we might start to see a bit of a pickup, because the Aussie is beginning to outperform a little bit against its commodity currency major pairs. So looking at the indices, we've got Wall Street, which, well, remained strong as sort of expectations of tax reform progress came through. The S&P 500 and the Dow continue to push out to all-time highs. A lot of movement around on Friday afternoon with this Michael Flynn testimony, but it certainly looks like tax reform coming through is going to be a positive for markets, and on Monday it looks like it's going to be a strong open, all-time highs again to be seen. In terms of your European markets, it's far less sure. Markets have been very much choppy in a consolidation range, certainly on the DAX, really uncertain in terms of the outlook there. Sort of stuck really sort of 400 ticks of range on the DAX, and it needs to break out above 13,200 to really sort of gain traction to the upside. Not really seen that yet, and it'd be interesting to see if that can happen. FTSE 100 remains an underperformer, a perennial underperformer, on the strength of sterling, which drives a negative correlation play with the revenues of around about 70% of the FTSE 100 generated over abroad. That translates poorly when sterling is strengthening. So subsequently, we're seeing FTSE 100 underperforming in recent weeks, as sterling has performed well. In terms of your commodities, again, if you can see a steeper yield curve and a stronger dollar, that's going to be gold negative. Now, at the moment, gold is hanging on to the 1260 support area. 1260, 1250 maybe is a key support area back that is preventing gold sort of moving back towards $1,200. But certainly at the moment there is a bearish bias, as I said, that the dollar is strengthening, so that's pulling gold lower. And this is a factor that we need to continue to look out for. Is the yield curve going to steepen for the States? If it does, we're likely to see the gold price falling away. Testing support around 1270 at the moment. Will it break down? Is the big question this week. Oil has had the underlying support from the OPEC meeting. OPEC extended its production cuts through to the end of 2018. Pretty much the minimum of what the market was looking out for. But now does that open the door for shale producers in the States to ramp up production? We saw on Friday the rig count in the States rising by 2 rigs. And is this, again, just an indication that the US has sort of got an open door now to come in and fill that supply void? Well, it certainly looks like the market is a little bit lower on Monday, and if it continues to sort of be the case that inventories continue to build for the States, well, maybe that will be a drag on the oil price. Maybe the oil price is hitting a ceiling after all. So factors to look out for this week is mainly, as I said, this services PMIs. You've got the 2 central banks, so the Bank of Canada, the Reserve Bank of Australia this week, but mainly payrolls report on Friday. This is the first payrolls report that we've had sort of since the hurricane factor has been taken out of the numbers. Data looks to be coming back towards trend, which is around about 180 to 200,000 jobs on the headline, which is there or thereabouts as expected. But also looking out for the wage growth. Wage growth is key for the States. Wage growth starts to pick up, we're going to see some strengthening expectations of rate hikes for the US. Now, wage growth is around about 2.4% at the moment. If that ticks higher to 2.5, 2.6 maybe, we might start to see the dollar strengthening some more this week. So with that in mind, I wish you good luck in your trading, and I will speak to you again soon. Thank you.